Weekly trading analysis for 18th to 22nd February 2013, brought to you by Ochiado Ochuko. This is the US dollar Canadian pair weekly time frame. So if you look at this chart very well, you'll notice the formation of an emerging Gartley pattern with potential reversal zone around 1.0324 to 1.0269. This pattern was spotted last week, and I made mention of it in my last video, stating why I would continue to ride on the back of the bull until price locks around our potential reversal zone. Since our potential reversal zone have not been reached as at last week, my bias this week is to continue to look for opportunities to scale in for a long position. Now, if you look at this chart critically, you can see that price is gradually moving up. Now, let us draw our potential reversal zone here. Our potential reversal zone is within the range of 1.0324. 1.0324 is around here. That is here. To 1.0269 is around here. Yes, exactly here. Now, let us draw our emerging Gartley pattern. Now, this is point X. This is point A. This is B, this is C, and this area here, this is our potential reversal zone, is point D. Now, connecting them together, this is the XA leg, the AB leg, the BC leg, and the CD leg. So we'll be looking for potential reversal zone here. We'll be looking for a price action pattern formation, a pin bar, an outside bar, an inside bar, a piercing pattern, evening star, and so on and so forth. We'll be looking for price action pattern around this place in order to go short. But as it stands now, we are still in a long position where we're looking for more opportunities to scale in to ride the trend up to this potential reversal zone. Now, if you look at this area very well, you can see that there are many resistance area around here. This is a resistance point here. So this area will be looking to short the market if price gets here. As soon as price gets there, they will be looking for price action pattern within this area here. That is this area here. This is our potential reversal zone. This area colored in yellow. So we'll be looking for price action pattern around this area here. We're looking for price to fall down. But as it stands now, we are still in a bullish move, and we expect that price will get to this area. This is the Euro USD 4-hour chart. Last week on the 4-hour chart, on the 4-hour time frame of this pair, a bullish Gartley pattern formed, and the market responded by moving for over 100 pips before resuming its downward movements. As it stands, our potential reversal zone has been compromised, and so this week we will be looking for a confluence of events to give us reason why we should look to enter the market and move in the direction of the bears. Already on the daily time frame, you can spot the formation of a bearish pin bar, or what we call a doggy. That is on the daily time frame. You can see it here, doggy here. With this in place, we'll be looking for other reasons to short this pair. Now, let me give you a practical example of what I've just said. If you look at this pair, we saw the formation of what we call a bullish Gartley pattern. This is point X here. This is point A. Yeah. Now you connect it here. This is point B. This is point C. Now this is point D. This area is point D. So this area was our potential reversal zone in this pair, and price moved by over 100 pips, forming what we call a quasi pin bar before price came down. Now this area is what we call our potential reversal zone here, this area here. So you can see that price has succeeded in compromising this area, coming down here. Price has compromised it, coming down. formed what we call an outside bar around this area. Price went up, and you can see it is gradually bouncing off from this area. So we'll be looking to short the market around this area. Already, the reason why we have so much confidence that the market may continue in a bearish movement, if you go to the daily time frame here, you can see the formation of what? A pin bar, a bearish pin bar. This bearish pin bar gave rise to the formation of this long candle. As you can see, if price goes beyond this point here, we'll be looking to scaling for a bearish move. So in our membership area, I'm going to be giving more reasons why we'll be shorting this pair, and I'm going to give you many practical examples. If you even look at this daily time frame, you also notice the formation of an emerging harmonic pattern. Now let me connect it so that you understand what I'm trying to say. This is point X, this is point A, this is B here, this is B here, this is a B here, point B, this is point C. Now let's connect them together. This is the XA leg, AB leg, the BC leg, and you can see we are expecting an emerging butterfly pattern. So in this area here, we expect that price gets to this point here. If price eventually falls, because this point B has been breached, so if price eventually falls beyond this point B, which has already happened, we're expecting that price will get to this area here, this support area. You can see this is a support point, this is a support area. We expect that price comes to this place before zooming up. So this is a classic example of how to take advantage of this kind of trade setup for maximum gain. As you can see, this is the CD leg. So all you just have to do is to take advantage of to try to see how to scale into a sell position in this CD leg. As soon as you scale in, your take profit will be around this area here that I've just colored, this area here. Your take profit will be around this area. So once your take profit is around this area and you see a reversal candlestick pattern, then that will be an excellent opportunity for you to buy. But as it stands now, our bias is still short, to short the market. Pounds USD weekly time frame. The pounds USD have been trending in a downward direction for some time now. Even last week, we saw the formation of a long bar candle. That is this long candle bar here. Price is gradually approaching a major support area at 1.5280. For now, I would be looking out for a pullback on the lower time frame, such as the 4-hour or daily time frame, before pulling the trigger. My decision to continue in the downward side of the market will be strengthened if I spot a bearish harmonic pattern. If price continues and gets to our key support area of 1.5280, we'll be looking out for a convergence of price action pattern to zoom upwards. Now, this is what I'm trying to explain here. If you look at this chart very well, you can see this is what we call a support area. That is at 1.5280, around area here, this area. So this area here is what we call a support area. You can see price has tested this area previously several times. If you look into the past, you can see how price have tested this area. So this is a valid area. You can see this was an area that was tested. Price tested it, zoomed off, came here. Price almost formed that what we call an inside bar, a pin bar, and a quasi outside bar, an inside bar. So this area is what we call a triple bottom. 1, 2, 3. Triple bottom is even more than 3 steps. So this is a strong area of support. So as soon as price gets to this area, expect a very strong bullish pressure to push price up. But as it stands now, our bias in this trade is to go short here. We expect that price will fall further to this area here. So this area here, you can see support, 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 support. So we expect that price will fall to this area. At this area here, we'll be looking for a harmonic pattern to give us a green light to go north, and we expect that price will travel up based on the strong pressure that it will experience around this area. So this week I want you to put an eye around this area because it is a very, very strong level. By the time you take advantage of this area, you should be looking forward to making a lot of pips on this pair. This is the Australian dollar USD US dollar pair, weekly time frame. If you look at this pair, you will notice the formation of an emerging bullish Gartley pattern with potential reversal zone in the range of 0.98044 to 0.97021. On this pair, we will seek to ride in the direction of the market until price gets to our potential reversal zone. At that region, we'll be looking to go long. But for now, a nice bearish harmonic pattern on the lower time frame will offer an excellent opportunity for us to continue in the short direction of the market. In our membership area, we will be discussing more on this kind of setup and see how to milk pips from any good available trade. Now let us draw our potential Gartley pattern. So if you look at this point, this chart very well, this is our XA leg. This is point X. This is point A. So this becomes our AB leg. This becomes point B. This becomes our BC leg. BC leg. So this area becomes point C. While our potential reversal zone is around this area here. So we'll draw it connecting it. Point D. So this is an emerging bullish Gartley pattern. So this is point X, the XA leg, the AB leg, the BC leg, and this is point D. So this area is our potential reversal zone. This area here is our potential reversal zone. So we expect price to move from here up. So as it stands now, the direction of the trend is down. And this is our CD leg. Our CD leg will be completed at point D. And if you look at point D very well, you can see potential reversal confluence of events. Look at this is a support point. This area is support, area of support, area of support. So we expect price to come to this area. As soon as we spot this confluence of events, we'll be going north. So as it stands now, our bias in this trade, that is the Australian dollar USD pair, is bearish. So the best way for us to take advantage of this pair is to go to the daily time frame and the 4-hour time frame to look for opportunity to zoom short, opportunity to make pips on this pair. This is the New Zealand USD pair, weekly time frame. On this pair, if you take note, price is locking around a major resistance area. And if you look carefully, you will notice that price have tested this resistance area twice, forming what we call a triple top. 1, 2, 3. What also makes this an interesting setup to consider is that price is also bouncing off from a psychological number. Now let us bring our arrow to see so that you understand what I'm trying to talk about. That is 0.85000. You can see how price got to this psychological number and bounced off. Now, if you go to the daily time frame, you can see how price is behaving around this area here. This is what we call a piercing pattern. Formation of a piercing pattern, a bearish piercing pattern. You can see how price bounced off from this psychological number. Now, on the 4-hour time frame, you will notice the formation of a bearish crab pattern with potential reversal zone around, that is, I'm talking about the 4-hour time frame. Formation of a bearish crab pattern with potential reversal zone around 0.8537 to 0.8528. Price got to that area and bounced off. Now let me try to draw this potential reversal zone so that you understand what I'm trying to talk about. So this is what we call a crab pattern. Now let me draw it so that you understand it clearly. So this is our XA leg. So this is point X, this is point A, this is point B. So you connect A to B. So this is our AB leg. Now connect, this is point C here. So this becomes our BC leg. Now this is our point D. Our point D is around, I told you our potential reversal zone is around 0.8537. 0.8537 is around here. 0.8537 is around here. That is this area here. 0.8528 is around here. So this area becomes our potential reversal zone. This area here colored in yellow. Talking about this yellow region here. This yellow region here is our potential reversal zone. Now, if you look at what happened, price got to our potential reversal zone and bounced off, from what we call an outside bar, from what we call an inside bar. You can see there are multiple confluence of events here, giving us the green light to go short. And you can see price came down, came down, came down. So in our membership area, we will be sharing how to scale in into a short position with multiple confluence of events. That is multiple confluence of events giving us reason why we should go short here. You can see this is the CD leg. So this area is called point D. This area is our potential reversal zone. This is point D. So this is what we call a bearish crab pattern. You can see how price came down. So we expect that price falls further. Thank you for watching this video analysis. If you have any question with regards to this analysis, you may send me an email or visit our website. Thank you.